Although the Dow traded up another 60 points today, it was at the bottom of the trading range after it gapped up. It created a shooting star doji in the overbought condition. Does that mean this uptrend is over? Not necessarily, but it does indicate that when they touched the top of this trading range and did an indecisive doji type day, it gave the prospect that if it opened lower tomorrow, there would be probably profit taking going back to the bottom of the trading range or back to the T line. The fact that they gapped it up today was the alert. That's usually, if you see a gap up in the overbought condition at the end of a uptrend, that gap up is usually a good indication that that's where the exuberant buying was coming in, and you start expecting some profit taking. Note how the same scenario applies to the NASDAQ. It gapped up, and once it gapped up, it closed lower than where it opened, creating a dark candle. But the fact that they gapped up in the overbought condition is a good indication there's probably some profit taking. And it applies to the same type of analysis that we expect, that when a trading price or trading trend goes through a resistance level, they'll usually come back and test it to see if that resistance level is now going to act as support. This improves the probabilities that we might be seeing some profit taking that brings us back down to the 200-day moving average over the next couple of days. This is why identifying specific patterns like the fry pan bottom that is forming in Apple makes the entry and exit strategy relatively easy. Today it did a doji. You can see the fry pan bottom. Stochastic starting to curl back up. If it opens positive, remember we've got the doji rule that says the price will usually move in the direction of how they open after a doji. A positive open would give you a doji sandwich, meaning this trading day would be the same magnitude as this candle right here, which would further confirm the fry pan bottom. And if they break out through this level, gives you the opportunity of a wave 3 of this magnitude. On the other hand, if it opens lower, you know that this breakout didn't occur, you don't take the trade. This is the type of evaluation that utilizes the same results that human nature does time after time to tell you which way a price is going to move with a high degree of probability. When we can identify sectors like Labu telling us the biotech sector has broken out, we can see where the resistance level was. A gap up through that resistance level tells you there's been a dramatic change of investor sentiment or a new strength. This allows for the identification of which stocks in that sector may be acting the best. ALGN becomes a viable trade with the expectation that it could come up here and fill the gap based upon the little slow curve after a nice belt hold left-right combo off the 50. And on a bigger scale, you can see there's a big fry pan bottom where investor sentiment is starting to build back up, making this area the next likely target. All this evaluation is based upon knowing what investor sentiment does on a reoccurring basis. That little slow curve and the fact that we're back into a breakout area or a gap area gives the prospects of more upside much greater probabilities. That'll be it. We'll see you in the chat rooms.